Well, hi everyone. So today we're just going to look at the euro. If you'd watched last week's video, you would have seen that I was bullish on currencies against the dollar and looking for the dollar index to break down through support, which it did. And we saw a rally in the euro and the pound and gold and in stocks, despite the fact that some of the tech stocks crashed through the floor. But we're not going to be talking about stocks today. I want to talk about the euro only in this pretty short video. So I've got the daily chart, and this is a pretty classic setup for the euro bulls, in fact. And I'm going to caveat that by saying these classic setups often are the trickiest ones because nothing in currency trading actually ends up being works classically sometimes, and we often get things that should be perfect, that look perfect, but turn out to be imperfect. But having said that, and also considering, before I carry on, that there is a lot of news coming out this week from interest rates, and we've had a lot of news. So we've got the Fed interest rate increase might be 0.5%, might be 0.75, somewhere between the two. Most people think 0.75, but the interesting thing will be the language, which might be pivot type language rather than just the numbers reflecting that. So all that sort of thing. We've had the EU Central Bank, ECB, increasing their interest rates by 0.75. So all sorts of fundamental stuff going on. But I just want to focus on the technicals here. This is the euro daily chart. And after this rally that started on the 16th, 17th, thereabouts, we moved up and broke through resistance here. And we broke through this downward trend line, which goes back quite a long way, a very long way, in fact. If you have a look at this, it goes back to the beginning of the year, or pretty close to the beginning of the year, somewhere around, sort of January or so, is the beginning of this trend line. And we've held to it all the way up until now, last week. And we rallied up through it. We broke up through that resistance and the trend line and these moving averages. This one is the 50-day moving average. This is the 100-day moving average, I think. No, I'm incorrect. This is the 20-day, and that's the 50-day moving average. We rallied up through there. And then we broke up through that resistance, the trend line, everything. And now we've fallen back down. On Thursday, we fell down, made a bearish candle. Not quite an engulfing candle, more like an inside bearish candle, but still not a great candle. And then on Friday, we saw the euro dipping down. Now, it's very interesting on the daily chart. It's pretty simple, really. That level to which we dropped on Friday was the 38% retracement level of the move up from this low, right to it precisely. It's also this previous support line. It's also the top side of this downward trend line. And it looks like a perfect place to buy. It looks fantastic. Technically perfect. Now, as I said, there are all sorts of fundamental things going on, not just interest rates and the dollar index and stocks and Meta crashing through the floor and all sorts of weird stuff going on and potential for more weird stuff coming up in this week. Putting all of that aside, from a purely technical perspective, this looks like a good area to buy the euro, like a really good area. And as I said right at the beginning of this video, often these perfect setups don't work out. So bear that in mind. But if we look at let's go from this daily chart to a 4-hour chart and see what's happening on the smaller time frames. And here on the 4-hour chart, you can see the same thing. There's the same trend line. I think we can ignore these moving averages for now because I'm mainly interested in those on the daily chart. But this is the 4-hour chart. There's that downward trend line, which goes back an awful lot of time to the beginning of the year. So it actually holds beautifully on the 4-hour chart as well. It's exactly the same trend line. We touched that trend line almost precisely, and that same 38% fib is still there. So we touched that, and we touched the upside, the top side of this downward trend line. And if you have a look at these candle patterns on the 4-hour chart, that looks pretty good. Looks pretty much like a reversal sort of bottom trying to form there against that support level. Now that support level is at 99 20-ish, which is also good because I like the 20s and the 80s. Those are often trigger levels or price magnets. Bear that in mind. No matter what chart you look at, really. It could be stocks, commodities, metals, Forex, whatever. The 80s and the 20 levels are pretty key psychological and robot manipulated levels. So bear that in mind. So we dropped down to 99.20, 0.9920, and we formed this potential reversal pattern. Although we haven't made higher highs yet, we are starting to form a bottom with lows not becoming lower lows, but pretty much the same. And if we have a look at the same thing on the hourly chart, you can see we've bounced down there. We formed a little double bottom on the hourly chart. So we rallied up through this 20-period moving average. Now, the 20-period moving average on the hourly chart's always a good indicator to look at. Not that it's anything magical or anything particularly fantastic about it, but it just often operates as a good level, a good trigger level to suggest where we should be entering trades, long or short. Just chuck a 20-period moving average on your charts, and it helps you with some idea of direction. You can see we try to break up. So all the way from this top down here, this is the hourly chart, we hit the 20 period, moved down, hit the 20 period again, didn't close above it, moved down, hit the 20 period for the third time, and that was at the close on Friday, or just around about the close, and we actually managed to close above it 2 hours in a row. Again, off this downward trend line, off that, it's not quite touching the 38% fib, but thereabouts, and also this prior very important resistance level, all happening at around about 0.9920, the key robotic trigger and psychological price magnet. So all in all, I think the euro looks good to buy, notwithstanding the fact that we've got all sorts of news coming out, and things are very weird in the markets at the moment and pretty tricky to trade. So be careful. There is potential for the euro to move lower, and we probably will get some wild swings overall in all the markets on Wednesday when the Fed comes out with its interest rate number, which could be 0.5 or it could be 0.75. I'm hoping for 0.5%, which means that we might get some life back into the euro, the pound, gold, stocks, silver, that sort of thing. We'll have to wait and see. But more important than that is the language that they come out with, that, as they call him, Papa Powell, the words that he uses after, about half an hour later, after the interest rate hike announcement, to see whether he's talking a little bit more dovishly than hawkishly about further interest rate increases as time goes on. So that's my trade for the coming week. I'm not going to talk about stocks and the pound and gold and that sort of thing. However, having said that, whatever applies to the euro at this point applies across the board. So look for levels on all of those as well to be potentially buying. My favorite is still the pound. Unfortunately, I'm not in the pound. I was looking to buy the pound on dips last week. I got a dip to within 4 pips of my entry price. I had an entry order. I wasn't at the charts when the price got that close, and my order wasn't triggered. The pound took off without me, and it showed quite a lot of strength, more so than the euro. But maybe the euro will catch up. Take care. Have a great time trading this week, and watch out for those news items that come along, particularly interest rates and also potentially jobs on Thursday. Take care.